Welcome to an introduction to transfer pricing. These will be a series of short videos that will summarize the basics of transfer pricing at a fundamentals level. So, what are the basics of transfer pricing? We should probably start by talking about what is transfer pricing. Transfer pricing is the price at which goods, services, intellectual property, or even loans or other things are transferred between related parties of multinational organizations or multi-state organizations across international or state borders. For example, TVs might be manufactured by a parent company in Japan and then sold to a subsidiary in the UK where they'll be distributed. Or that subsidiary in the UK might be performing functions like accounting, finance, or legal services on behalf of its foreign parent. The parent could have a loan to the other party. The parent might own an intangible like a brand name, and it licenses its affiliated parties to use that brand name. These are all examples of transactions that are happening between affiliated companies, between a parent and a subsidiary, between two subsidiaries within the same company. Now, let's look at a simple example. Let's suppose that we have a UK distribution company. When you first look at its profit and loss statement, you really can't assess anything about its transfer pricing, whether it has transfer pricing issues or whether there's any exposure as a result of transfer pricing. In isolation, it's impossible to judge what's going on. We need to look at the transaction between two related parties. So let's make the example more interesting. Suppose Japan Co. and the UK Co. are related parties. They could be affiliates, they could be a parent and a subsidiary. And in this case, we're going to have Japan Co. sell products to the UK Co. They're going to sell 10 units of the product at £7 per unit for a total price of £70. The interesting thing about this is that the transaction is going to link the two companies' profit and loss statements. As you can see, the $70 of sales that the Japan Co. has, and in this case we've assumed that's the only transaction, or that we've segmented out just the transaction to UK Co., what shows up as sales for Japan Co. is going to show up as cost of goods sold for UK Co. Again, in our simple transaction, we're assuming that this is the only thing that the UK Co. buys and then sells on. But you can see this direct connection between the two companies. The two companies have a total consolidated operating profit of 15, and this transfer price is going to be important as to where those 15 pounds of profit are earned. Thank you, and please enjoy the rest of our videos in this series.